So here's the deal. Your friends think you're a degenerate gambler. Your family are pretty much convinced every time you say that you're nearly there, that you're actually nowhere near being nearly there. But you and I both know you wouldn't be watching this video if you weren't a legend. You wouldn't be watching this video if you're not in a year's time going to be that full-time trader that today you can only dream about being. Well, in today's video, I'm going to give you 5 tips to become that full-time trader that you've always wanted to be. Let me just grab a coffee first. Okay, so let's get into it. The 5 things you must do and must know before you go full-time in trading. Number 1 is have a proven strategy. Now, as obvious as this may seem, you'll be surprised how many people will say, yeah, I can trade, and they believe they can trade, and look, perhaps they can trade, but they don't have a statistically proven strategy or edge based on historical data. So really, it's impossible to see if they can actually trade. There's a big difference between being able to call the market and actually trade. In my view, you should have at least a 5-year historical data sample in every asset you trade for the strategy that you're trading. For example, if your strategy is a D1 price action based strategy like mine is, I would test that over 5 years of historical data in all of the 15 assets I trade, the 13 currencies, and the 2 commodities. The thing is, markets often operate within niches. So the market may move within a certain macroeconomic niche, it may move within a certain technical niche for 6 months, maybe even a year. And so something that's been working for you over the past 6 months or 12 months could never ever work again. And I have seen this happen where traders have developed some kind of edge, some kind of strategy, and they've tested it over like 300 samples on a 5-minute time frame in the year 2020. And then it doesn't work live. And then they test it in the years preceding 2020 and it doesn't work. Having a decent data sample will completely eradicate that problem. Testing your strategy over a minimum of 5 years is going to give you a very, very good sample size so you can work out your strike rate, your average loss size, your average drawdown size, and it's also going to give you a good idea of what your expected returns can be from this strategy month on month. If you're going to be relying on trading for your full-time income, you need to know how often that strategy goes through periods of break-even or periods of drawdown so that you can cope with it better when those come around. There's no point in going full-time with a strategy that isn't going to make you a full-time income with the amount of capital you have available. Now, the second step here is to have a minimum of 1 year of live positive trading results. Now, for some of you, again, this may seem obvious. For others, you may think that's way over the top. Now, when I say positive, I'm not talking about making 100% over the past 12 months. I'm talking maybe 20 or 30%. If you've made 20 or 30% over the past year on a live account without taking a huge drawdown, I'd say you're pretty much set. So first of all, having a positive year of live results is going to massively build not only the balance of your trading account, but it's going to massively build your confidence if you go into a period of drawdown or break even. You'll be able to look at that year of positive results and say, look, I've done it before, I can do it again. Secondly, it's going to prove to others around you that you can trade. Now, I'm not talking about your mates down the pub. We've already established they all think you're a degenerate gambler until you make loads of money, in which case they'll think you're a legend and brag to other people about the fact that they're your mate. But I'm talking about your family, your friends, the people who actually really mean something in your life, especially if you're dependent upon these people. Maybe it's your parents, or these people are dependent upon you, your wife, husband, children, etc. It's very important to have them on side. They're never going to understand what you do. Let's just get that, out in the open. They're never going to understand what you do. I'm married. I've been with my wife for 7 years. She still does not understand what I do at all, but I have her on side because she knows that I know what I'm doing. And it's important that you have that support from the people around you, even if they don't quite get it, as long as they're not constantly planting that seed of doubt. Now, lastly, and arguably most importantly, having a 1 year of live positive results proves that you can actually execute the edge that you've developed. It's all good and well having 5 years of back-tested results, but if you can't physically execute those results and achieve positive results with that strategy, there's a problem there.
Trading has given me feelings or emotions, or has helped me grow in a way none of the other businesses ever did or could do.
But the bottom line is, financially, you're not making the money.
No.
If you have a year of live results, that proves that you can execute the strategy that you've developed and you can execute it well. Now, step 3 is have secure capital. And I'm about to make myself super unpopular here when I say that funded accounts are not secure capital. Someone else's money is not secure capital. I'm talking about your own personal live capital that no one can take away from you. Think about it. Imagine 3 months into going full time in your trading and you accidentally break a rule, or the funding company goes bust, and you now have your only way of making income taken away from you. That is pressure you absolutely don't need when you're trying to go full time. Now, I'm not saying don't have a funded account. I actually think if you want to go full time, you should have a funded account. Not only is it a good proof that you can trade well, but it's also extra capital, and it's probably going to be significantly bigger than your own personal capital. But I'm just saying, have at least a backup of your own live capital so that if you lose a funded account, you can fall back onto trading your own live capital. Happy days. Now, how much capital you're going to need is of course going to depend on your monthly outgoings. If your monthly outgoings are $2,000 a month, you're going to need to make $2,000 a month or more, right? You're always going to want a little bit of a buffer. But to give you an example, if you're living with your parents, you're a young person, you're not going to need as much as someone who's 35 and you've got 3 kids and you're the only income earner in the house. You're obviously going to need to make more money. Oh, and you also live in the centre of London and have a house that costs you $5,000 a month. Now, on the other side of the spectrum, you could be a single guy, you've got no mortgage and your outgoings are pretty low. You don't really have a social life because you're a degenerate gambler. So you don't really have much outgoings, in which case just work out what your outgoings are and see how much you're going to need to make from this live account. To give you an example, if you were to trade a 10k live account on 5% risk, £500 risk per trade, if you averaged 4R per month, that's $2,000 a month, that's 24 grand a year, which is pretty much your average salary for like any admin job here in the UK. Now imagine you have that 10k sitting ready to trade on a live account and you're trading a funded account. If you lose a funded account, you can always hop over onto the live, or what would be even better, you trade the funded account and you have a trade copier sending the trades to your live account or vice versa. So as you're trading your funded account, you're also earning money and compounding that live account at the same time. Now, tip number 4 is to have a 6-month emergency fund plus a 25% emergency buffer. So if your monthly expenses are £1,500, 6 months of savings would be 9 grand, plus your 25% takes you to £11,250, I think. Yeah, 11.25k. So in trading, a 6-month break even or even drawdown period, it's not super common, but it's common enough that it's worth mentioning. You want to be able to at least cover your outgoings each month and have a little emergency buffer there in case something goes wrong. If your car is going to break down, I can assure you it's going to happen in the 6-month period that you're going through a drawdown straight after you decided to go trading full time. You'll never experience a drawdown in your trading career until you decide to go full time. You'll never experience your car breaking down until you decide to go full time and you're in a 6-month drawdown. That is just the way things happen. So have plenty of capital on the sidelines to give yourself a leg up or to get you out of a ditch if things start getting sticky. If things start going south, we'll just go with that. Now, step/tip number 5 is have a ruthless amount of self-belief. Let me just get this straight. You are not normal. No one around you understands what you do, nor do they really want to understand what you do. You look at red and green candlesticks on your laptop or on your computer screen and make predictions about where the global currency markets are going to go. No one is going to believe in you or understand what you do. And when they're not seeing monetary success, they are going to start planting seeds of doubt. This is not malice or, they're not trying to undermine you or destroy you. This is out of genuine care. And from my experience, it's typically the people that love and care about you the most that are going to put as much doubt in your mind as possible. Again, they're not doing this intentionally. They are just genuinely concerned about you and potentially concerned for themselves as well if they're living with you, etc., etc. So you need to have self-belief. But this self-belief can't just be plucked out of thin air. It can't just be like, Wolf of Wall Street, just like thumping the chest, yeah, man, I'm such a legend. No, you're not. Look at your backtesting spreadsheets, look at the data you've gathered, and then you can tell me if you're a legend or if you're not a legend. If your backtesting spreadsheets and your data says that you're consistently profitable over time, over the past 5-year period, and your 1 year of forward testing live also says that you're profitable, you're a legend, congratulations, you can do as much chest pumping and all that kind of stuff as possible. But don't just sit there and say, yeah, I have loads of self-belief, I'm gonna smash it, if that's just a baseless claim. I can tell myself all day long, yeah man, I'm gonna smash this marathon, I'm gonna come in 10th place, etc., etc. I can't even walk a 5K. So all the self-belief in the world is meaningless if I can't actually back it up. So if you know your edge and you know that you can perform, really work on your self-belief. Get your head into those spreadsheets, get your head onto the charts, and understand you can do this regardless of what people say. So in conclusion, if you're someone who has a very limited number of responsibilities and a very small number of outgoings, now is your time to take the risk. The ball really is in your court, especially if you're a young person, you don't have many people dependent upon you, you don't have a lot of responsibilities or financial outgoings, liabilities. Now is your time to take sensible risks. Now is your time where you can make mistakes and you still have time to correct them. Once you crest the hill of 35 years old, you're really out of the ballpark of being able to make big mistakes and still recover it and have a semi-decent life. There's a lot of people who are absolutely broke, had no prospect in life, and by the time they're 30, and by the time they're 35, they're a millionaire, they have multiple businesses, etc. As soon as you get over like 35, 40, you're getting into an area where if you make serious financial mistakes, it could have a crazy fallout effect on all the people around you, family, all that kind of stuff. If you're young, take advantage of this time. Now, if you're someone who's a little bit older, you've still got those expenses and outgoings and all that kind of thing. This doesn't mean you can't be a full-time trader. It just means you have to play it a bit more conservatively. If you're a young person with hardly any outgoings and, no responsibilities, you don't need to have, 12K in the bank. You don't need to have a 10 grand trading account straight off the bat. You can scale down those numbers quite a little bit there and you can steam on forward because you've got that support network around you. Those who are a little bit older, a bit more responsibility, you're gonna have to play a little bit of a longer game and you're gonna have to be a little bit more conservative. Now, with all that being said, guys, if you are a beginner and you have absolutely no idea how you're even gonna take these first steps, or if you're an intermediate trader and you want to go full-time, you want to get funded and that kind of thing, check out the top link in the description. My company, KB Trading, have courses for beginners, we have courses for intermediate traders, and we're even bringing out in the next month or so a price action concepts course, which will be a deep dive into exactly how I trade, how to build strategies, how to backtest and gather statistics, to build your own positive expectancy models, to generate your own statistical data-driven price action strategies. It's gonna be awesome when it comes out. Stay tuned for that. But as always, guys, I hope you did enjoy this video. Keep your chin up, keep pressing forward, take care, and I'll see you in the next one.